Hello everyone, Big Money here with an annual overview of my stock portfolio in 2025. If you've been following the channel, you will know that I started this year with a stock investment challenge with the goal of outperforming the markets. As we are getting close to the end of December, it is time to take a look at how my picks were performing and what I expect from 2026. First and foremost, let's see the raw numbers. I started 2025 on eToro with a balance of 3,600, which was 54% in profit at the time of January 1st. At the end of February, I moved my investments from eToro to Interactive Brokers with a balance of 4,100 and then added another $1,000 in April when the market was providing discount prices on some of the stocks on my watch list. At the end of 2025, my balance is $7,000, which means a total ROI of 32%. If I consider the average stock market return to be 10% annually, it means that I have outperformed the markets by a multiplier of 3. The Nasdaq has been up roughly by 20%, so even if I take the best performing index of the year, my portfolio has surpassed it by a multiplier of 1.5. I am very happy about it, as it confirms that the method I use for picking stocks is working pretty well. There are some stock picks that I am very proud of and some others not so much. The good thing is that the ones in green are up by several 100%, while the ones in red are double-digit drawdowns at worst. The top 5 is Spotify with more than 600% in gains, Meta with 550%, Coinbase over 530%, Western Digital with over 500%, and Nanobiotix with 350%. Now, as you can see, most of these are held for over 3 years, and this just shows that a high conviction play with a well-timed entry can make exceptional returns. I mean, the top 3 was an easy pick. All of them are companies which are transformative. They have reshaped our day-to-day lives, and it would be difficult to imagine the future without them. Western Digital took its time to play out. I mean, 6 months ago, it was trading around $30, and the AI boom just catapulted its valuation to insane altitudes. Nanobiotix was honestly just sheer luck. I mean, it was clear that addressing cancer treatment with cutting-edge technologies is a good idea, but honestly, I expected it to grow at a much slower pace over the years, but hey, I'm not complaining. The bottom 5 is GameStop, which I hold just for fun. With this one single share, then probably my worst pick is Ubisoft, which is down 12%, but I'm holding 30 shares of it. So even though I thought that the entry of Tencent and the restructuring of the company will pull them out of the ditch, it seems like it's not going to be so easy. It still has a chance to turn green from here, but to reach its previous peak is quite unlikely to happen anytime soon. Then I have Novo Nordisk, which was supposed to be successful with their obesity drug, but other manufacturers might have just beaten them to it, so I think it will take a year or two until they figure things out and start pumping profits to make the price go up. Webull is a fresh entry I bought in October, and I will buy some more before the end of this year. The price has still a lot of time to turn bullish. We are way too early to decide if this was a good call or not. Finally, Cooler Technology is super volatile, but the fundamentals are still the same, no changes there. The thermal isolation solutions are still being used by key sectors from aerospace to tech, all super hot businesses, and I will apply some dollar cost averaging there to make sure that I will have a decent P&L when the price goes up. These are the worst performing ones, but not my biggest disappointments. I mean, I was expecting Adobe to perform a lot better, Wizz Air too. I understand that Nike is struggling because of tariffs, but at least that can still be overcome with some decent management strategies. This year has been rather alright. I have no reasons to complain. My balance has been increasing steadily, I am well diversified, so I can possibly survive a big correction without too much frustration when it actually happens. About 2026, I expect modest gains. There is a clear indication that the stock market rises, mostly because of AI companies being heavily subsidized by different governments, and the bubble has been inflating for quite some time. Some research would suggest that if we take out all the government-driven growth from the booming tech sector, the global economy would actually show serious signs of recession. So what am I going to do? Well, I started to scale out of some of the stocks where the P&L was over several 100%. I intend to keep reducing some positions if an asset becomes steaming hot and hyped up. For instance, I got fully out of Bitfarms, which is a Bitcoin mining company that shifted attention to AI. I bought it at an average entry price of 80 cents and sold it all at $5.8, booking a 700% gain. It was a combination of a lucky entry and an unsubstantiated hype that got me into this percentage, and I'm not hesitant to take profits if I don't see the fundamentals supporting the rise in valuation. For most of the other picks though, I will be patient. My overall timeline is 10 years at least, and I started taking stock investment seriously in 2022. So in theory, I still have another 7 years to look forward before I check myself out. Next year, I will try to look for opportunities in more boring stocks like Coca-Cola or Petrobras, and I will keep on diversifying my assets just to have some protection when the Nasdaq starts its correctional phase. From a technical point of view, I have two different assessments. One says that the Nasdaq has been in an uptrend since 2023, and this rising channel has only been interrupted temporarily by the chaos caused by different tariff announcements. Such a structure cannot be maintained for too long, and it is just ripe for a disruption. The other way to read the chart is to say that the tariff dip was in fact the correction and not just a deviation, and we are looking at another year of increase or even more. This idea would be also supported by the Fed cutting rates in 2026 and money supply getting abundant once again. I am getting prepared for some major dips to happen in the first or second quarter of next year, and then some more volatility to follow until we see a decent correction that would actually last a couple of months and properly shake out the weak hands from the market. So in conclusion, I can say that even though 2025 was not easy to navigate, in hindsight it was not too difficult either. I managed to have nice gains in most of my stocks, and I have no plans to change my methodology. I will focus on less exciting companies and shift attention to value preservation instead of aggressive growth. If I manage to get 10% in gains from 2026, I will be more than satisfied. Alright guys, this was my annual stock portfolio assessment. I hope you had a great year and wishing you all the best for the next one. I will keep making updates either monthly or quarterly, depending on how much my holdings will change. Until next time, take care, big money out.